3, 2, 1. What's up, everybody? Welcome back to Trades and Gains. We're currently live on free Wi-Fi radio over on Twitch. And as always, this video is powered by Investor Central Club, where you can use the code SUPERMAX20 for 20% off your first month. So today, why did I bring you here? Well, we're back in the earnings corner, okay? And we're talking about Chipotle today. Yes, that Chipotle, the stock that Wall Street treats like it discovered fire, even though it's basically rice, chicken, and just overall vibes. Chipotle reports earnings Tuesday after the close, and on paper, this is supposed to be fine. Not great, not terrible, it's just really expensive. Now here's what the street's expecting. Revenue to come in at $2.98 billion, which is up about 5% year over year. EPS is coming in at 24 cents, which is actually down 4% year over year. Comparable sales down 2.8%, down from up 5.4%, by the way, last year. So that's about what, a 7-point swing? Let me repeat that last part because it matters. Negative comps. And for a stock trading at a premium multiple, that's not a vibe. That's just straight up mathematics. Now, here's the thing. Chipotle is growing, but it's growing the hard way. More stores, more promos, more limited time menu items, and less margin. So the model now basically looks like this, right? Revenue's up, margins are down, same store sales are negative, which means Wall Street is being asked to believe, don't worry, this is just temporary. And guess what? Wall Street loves that sentence until it doesn't because, well, they have nothing to show for it. So now let's talk about what isn't getting enough airtime when people do look at Chipotle for earnings. First, the comp swing. Last year, up 5.4% on comps. This quarter, negative 2.8% comp. That's an 800-point basis swing. That's not normalizing, that's traffic pressure. So another thing, second, delivery, it's shrinking. Delivery revenue is expected down 7% year over year. Delivery tickets are bigger, they carry fees, they help leverage fixed costs. Losing delivery mix might help labor a bit, but it hurts dollars per visit. Again, this is just math. Good news, I passed it. Bad now. Wow, that sucks, Tricky. But hey, congrats on fucking passing, my boy. Now third, promos are doing the work. BOGOs help traffic, but BOGOs don't help margins. So if traffic needs discounts to show up, what happens when the discounts stop? You either lose traffic, lose margins, or you just lose the stock multiple. You gotta pick one though. Now here's the quiet part that nobody wants to say. Chipotle is still priced like perfect execution, stable comps, and expanding margins. But what the quarter is setting up is negative comps, margin compression, and promo-driven demand. That's not failure. That's just perfection. And premium stocks need perfection at the end of the day. So what they're trying to do is paint a different narrative that doesn't make it so everything has to come in above or over or at what is expected. Now here's the scenario map. 1, a beat and comps are not as bad. So revenue above 3 billion, EPS above 24 cents, and comps closer to flat. So between let's call it 1% to 0 would be like good comps probably if they're projecting negative 2.8. Now the stock, it'll probably pop, but the narrative becomes pressure is bottoming. Scenario 2, it's in line but ugly comps. Numbers hit, comps still negative 2.8%, and margins are pressured. Stock will likely chop or just fade at open the next day. Market, they're going to focus on traffic at that point and not the EPS necessarily. Scenario 3, miss or cautious traffic commentary. Revenue or EPS miss, management hints demand is soft into 2026. That premium multiple is going to get questioned. And guess what? That's when things get uncomfortable. So at the end of the day, this isn't about whether Chipotle is a great company, because no one's arguing with that. I get Chipotle at least twice a week, okay? Because it is. So this is coming down to a negative comp burrito stock, deserves a premium multiple, and a slowing consumer tape. And that's the real earnings question that Chipotle is going to have to answer for consumers. Anyways, I'm Max Pitts. This has been Trades and Gains. Make sure you like, comment, subscribe. It really helps out the channel. And I will see you guys in the next episode. Have a great one.